Welcome back. If you're just joining us, it's Daybreak on Trust Television, and all is now set for our second conversation. On Tuesday, the Central Bank of Nigeria, during its Monetary Policy Committee, increased the benchmark interest rate by 150 basis points. The MPC moved the MPR rate from 14 to 15.5% and hiked the cash reserve ratio by 500 basis points, while pegging the CRR at a minimum of 32.5%. 32.5. According to the MPC, the measures were as a result of the aggressive growth in the inflation numbers. As a follow-up to the meeting, the CBN held a post-MPC explainer to justify the committee's decision. Chairman Deben brings us that report.
Final decision of the MPC to raise the MPR by 150 basis points and the CRR by 500 basis points has sparked not only reactions but worries amongst Nigerians, sparking many questions on its impact on loan rates, MSMEs and ultimately the Nigerian economy as a whole. Director Bank Supervision Mustafa Haruna stated that the rates will inevitably go up, adding, however, that there would be a trade-off.
There is going to be a trade-off. The customers of banks have their loans, even though at a very high cost, but at least it is not going to be too significant that will really impact their own bottom line as well. But ultimately, what we are expecting to see, like I said, is to rein inflation, and the banking system is a veritable channel for the transmission of monetary policy.
Part of the decisions of the MPC was to halt intervention funding and only support critical sectors effective Tuesday.
To make sure that the monetary policy tool that has been deployed is very effective, you definitely need to constrain the money supply. So indeed, we've closed the gates. Only interventions that are very, very critical. MSMEs that are statutory. We take 5% of every bank's profit after tax. Indeed, it's not a lot to deploy to SMEs. And then supporting the electricity sector is very, very critical. I'm sure you all know we'll be providing liquidity, and then we're going into a regime where we're doing what you call the TXDX.
With the scarcity of foreign exchange within the nation triggering issues in several sectors of the economy, the Director of Foreign Exchange, Ozomena Inaji, unveiled plans by the CBN to ramp up supply.
The central bank is doing a lot to ramp up supply. One of them is our drive on remittances and naira per dollar, and we have seen a huge increase in the level of remittances that have come in after we implemented the naira per dollar. Also, the RT 200 is also one aspect that is bringing in repatriation has gone up. The governor mentioned it yesterday at the briefing that the first quarter was about 20 million, second quarter was about 600, and in this third quarter we're looking at over $1 billion.
According to the group of directors, one of the major factors triggering a high rate of inflation is Nigeria's high liquidity rate. Hence, the policies being implemented are geared towards reducing excess money in circulation in a bid to rein in inflation in the country. Chamun Dabeng, Trust TV News, Abuja.
Financial analyst and CEO of Finance with Mukhtar. Mukhtar Mohammed joins us now from Lagos. We'll be taking Mukhtar's reaction, but before we do that, let us hear what the Central Bank Governor, Godwin Emefiele, had to say in defense of the recent hike in the MPR rate.
150 basis points.
Committee's decision. Members deliberated on the impact of the widening margin between the current policy rate of 14% and the inflation rate of 20.52%. At this meeting, the option to loosen the policy rate was not considered, as this would be gravely detrimental to reining in inflation. The committee thus agreed unanimously to raise the policy rate to narrow the negative real interest rate and narrow the interest rate gap and rein in inflation. Committee thus voted unanimously to raise the MPR. In summary, the MPC voted to 1. Raise the MPR to 15.5%, retain the asymmetric corridor at plus 100 and minus 700 basis points around the MPR, increase the cash reserve requirement ratio, CRR, to a minimum of 32.5%, and 4, retain the liquidity ratio at 30%.
Welcome back. We will now join Mukhtar Mohammed to get his views on the recent position of the Central Bank of Nigeria. Good morning, Mr. Mukhtar.
Good morning. Always a pleasure to be on your program. Thank you so much for the opportunity.
It's a pleasure to have you join us. You listened to all that the Central Bank governor had to say. It's been the third in the series of increases in the MPR rate. We are one of the several countries that have now jacked MPR to over 300 basis points, in our own case 400 basis points in recent times, in a bid to curtail what now appears as an aggressive increase in our inflation rate. Given the arguments that have been made that this inflation is externally induced by the global disruption in the supply chain, by the Ukrainian war and the normalization of interest rates in the West, do you think these efforts by the Central Bank of Nigeria is sufficient to rein in inflation?
Instead of treating the sickness itself, because the CBN know where the issues are. The issues, liquidity in the Nigerian economy can be mopped up. But how do you meet supply in terms of the FX? What we see happen in what is causing this high rate of inflation in our case has to do with over-dependent on imported products into our country and the devaluation of our currency, which is still ongoing. So cost of goods or services has gone high, so the consumer will need to bear some of these costs. That's exactly what is happening. So they are not addressing, yes, you can mop up local liquidity, you could raise the bank liquidity ratio, cash reserve ratios, you could do that. That could only stabilize in terms of locally. So, but for you to really get stability in making the price come down, then you need to look at our import windows. You need to see how you can stabilize the exchange rate. You need to see how you can. They are working towards making sure that they meet every legitimate demand. That has been the main problem. They've not been able to meet every legitimate demand especially from the manufacturers.
Okay, you have mentioned a number of issues which does appear clearly to be a challenge from the fiscal side. But my question really would be, with some of those constraints completely out of our control, is there something different that the central bank would have been able to do, especially given our negative interest rate environment? Because, of course, as you know, conventional practice would rather have the inflation rate lagging the interest rate, but the reverse is in our case. And if we have to stop those dollars from going out of our economy, those dollars we critically need to meet demands. What differently would we have done?
Yeah, I think you mentioned the physical side. I think the only difference is that the CBN would have done was on the physical side to be able to do what they ought to do. Because you see, we have three sides that are really, we have the physical sides, we have the monetary side, then we need to also look at how they can work together as a team. So now what we are saying now is that the physical side seems not to be non-existent. I've said it in your program before, and I'm saying it again, it's non-existent. Given sometimes you attempt to say, oh, what is happening in the global economy is the same thing that we are suffering here in Nigeria, which is right. All over the world, we're going through one crisis or the other. But when you look at the physical side, they are trying to put money in the hands of their people. Either if you look at the UK, they have reduced taxes for their people. They are trying to see how they can even be able to pay electricity bill for the people during winter. Those are areas, and they are cutting taxes, and they say more cuts are coming so that their people will have more money in their hand. That cannot be done by the monetary policy. That will be done by the fiscal side. But here in Nigeria, it is not like that, because the physical side are looking for money to carry out all their project, and they are looking at widening the tax grab or bracket, or again adding more taxes to now tax burden to the people. If not for the Minister of Communication, by now we should have been paying taxes even in making call or sending text messages. He had to go up. So it's I think basically is the physical side. Now, in economy, you need to look at the physical side, you need to look at the monetary side, then you also need to look at the structural side. Now, structurally, the way the Nigerian economy is built is more like more or less built to fail if the physical side is not doing what the monetary side, if the monetary side is doing something and the physical side is not doing, and the physical side is doing and the monetary side is not doing, then it will affect the structure. So what we are seeing here is that CBN is even intervening in areas that are not CBN's core competency. Like the CBN governor said, they have intervened in sectors to the tune of 66 trillion. I mean, 66 is about 66 billion into those sectors to see how they can revive those sectors. That is not what the CBN should be doing. But because the CBN knows that the physical side is non-existent, they need to do what the physicals are not doing by trying to see how they can support these businesses directly rather than taking them through the banks.
All right, so we're all in agreement that this is actually a global issue, that it's not only Nigeria that's going through this particular problem. But the thing is, we've seen how other countries have actually gone to try to arrest this particular problem. You made mention of some of these things, not just jerking up the interest rate or anything like that. They've gone to do some other things as well, reducing taxes, trying to subsidize a couple of things, heat, energy, power, and the rest of it. And all these problems that we've outlined that are problems that we have with the Nigerian economy, the solution seems to be long-term issues. All right, trying to raise liquidity, reduce imports, improve our export and all that, and strengthen our manufacturing sector. These are long-term issues. What can we do as a quick fix? Just like other countries are doing, reducing taxes and trying to see if they can be able to make things easier for people, just like you said, putting money in the hands of their people. What can we do in Nigeria as a quick fix to see that we stabilize this thing a little bit?
Which we could do it fixed quick. You know, those economies are able to do it crispy because during the boom, they had the reserves. Yeah, they had reserves. They didn't just eat up everything that they own. They tried to say, okay, there could be a challenge. So they set aside something behind. That when this challenge comes, we can now go into our treasury. Look at it. The UK is not bothered that at the moment, the UK dollar is trading, the UK pound is trading to the dollar 50 years low. And to even complicate matter, even the Chinese yen is trading behind the dollar also. Now, what have Americans done that is different from other countries? They've only tried to see how they can put direct funding into cash into the hands of their people. In families that they make sure that families that do not earn up to $50,000 in a year are supported with $191 in terms of food tickets that were given to them to purchase food, not cash at hand. They gave them a ticket to go to any grocery store, buy food, so that you know that when you are not hungry, then the other things are not major issues. For the UK, they look at their power sector, they look at the winter is coming, energy costs will go as high as $5,000, £5,000. They say, no, we reduce it. So they are looking at innovative ways of every economy is going through. But now they are able to take those decisions because they were able to do the right thing and when their economy was buoyant. Now, what are those right things that would have done, that would have helped us at this moment? A robust reserve. In 2008, when they had the global crisis, why Nigeria did not suffer so much in terms exchange rate did not skyrocket at that time, oil price did not affect us, but because we had a robust reserve of about 100 billion at that time. And also we started creating the excess crude account. As it is now, there's no excess crude account. The reserve can only last us for 6 months of product. So what we are seeing in the Nigerian context is We are seeing a government that does not have a reserve to help its people. So definitely, when you talk about the quick fix, would have been the quick fix is to look at the ordinary, the vulnerable Nigerians and begin to say how you can help them at least to meet up a food supply. Maybe they should be able to eat food, even have food on their table. They will tell you that they give 5,000 naira cash. We're saying that look at how developed economy does. They don't give this cash. What the people need is food. Can we begin to think of how we can feed our people directly through government coffee? Number two, subsidy is a scam. Whether we like it or not, I remember President Buhari have said it before he came to power. Subsidy is a scam. Subsidy does not help the poor. Subsidy is drilling us. At this moment, 8 months, NNPC have not been able to remit a kobo into the federation account because they say they are paying subsidy. Those are things that the government need to look at. Those are the pains that the government need to look at and say, look, you can take this pain. If you remove subsidy, what are the cushion you put? Social investment, education. Our educational sectors is non-existent, by tertiary education. They have been at home for months, since February 14, and nobody seems to be worried about it. How can an economy grow without the educational sector? So we need to look at all this and begin to find out means. Quick fix is put money in the hands of the people. But the CBN is already telling that we have so much liquidity in the system. So how do we put money in their hands? So that will cause inflation. Then the other quick fix is try to see how you can get more supply of this dollar into our Nigerian economy. And the only way you could get those supply is through our crude oil sale. And now our crude oil sale, what we gain in crude oil sale, we lose in terms of refined petroleum product. Will you remove subsidy now and try to see if you are paying 3-point-something trillion on subsidy, put 1 trillion of that money into the economy, and then begin to think of how you can now boost our reserve with another 1-point-something trillion. Then you will bring down the exchange rate. At that time, the dollar supply, the people that need dollar will be able to legitimate people. I keep saying legitimate people that need dollar. The manufacturing sector especially, not people that are going for holidays or school fees. No, those are not the people that will really grow your economy in the short term. They could grow it in the long term, but in the short term, who are those people that need this dollar? The manufacturing sector. How can you help them to get this dollar so that you can bring the cost of production down? And then we are beginning to address the volatility of inflation and exchange rate at the same time.
Yeah, Mr. Mukhtar, listening to you and also listening to the CBN governor, one wonders what kind of deep mess we are in. On the one hand, post-COVID, we are struggling to reflame the economy, which gave birth to all of the series of interventions that we are seeing to the tune of about 9 trillion naira. Some of these interventions would have a lag period before they effectively kick in, especially about 5-point-something trillion that went to the manufacturing sector, because they have to do with expansion, purchase of plants, which have to be delivered over a period of time. Installations have to happen before actual productions kick in. And whilst we are still within this lag period, the CBN is now saying we are cutting back on interventions. We are mopping up. I mean, with the increase in the CRR, it then means that the bank will have very little amount of money to play with. There is also the LDR aspect of it, still biting the banks. We seem to be mopping up at a critical time, and rightly so, because we are going into an election season and our economy may be awash with all kinds of cash. How much of a quagmire are we in? How much of these restraints, can we put into the system that would not ultimately curtail growth? You couldn't have given so much money to the manufacturing sector and then begin to plug back at the point where they should be getting to the point of production. How do we balance this whole thing so that we don't ultimately harm the economy that we are trying to protect and get things to spiral above the roof?
You're saying the CBN has done a lot. I mean, I feel for the current CBN. They've tried to do a lot. Unfortunately, because one side is not being responsive to its own side of the deal, we are in this situation that we are now. Now, what do we do to balance it? The CBN came, they have, which is taking about 100 SMEs and support them to grow the economy. They're already doing that. Like you said, I mean, you're talking more like an economist. I'm impressed with the way you are going about the numbers. You seem to know all the numbers. And with that, it shows that, look, The CBN has done what they have to do. RX 100 supporting those SMEs, making sure, so they are still going to support those SMEs that the CBN governors. My only challenge is that we need to know these companies that you are giving this money. We need to be transparent. If you are giving 66 billion to this company, why are you giving them? Who are these companies? How much do they contribute to the GDP? He just mentioned the agricultural sector, manufacturing sector, value chain. So we need to know these sectors. Number two, the greatest challenge that we have is in terms of unemployment. If you have people that are working, then you will not be able to say, when you see when you are doing all these policies, then they have money to spend. And if those things comes down, then they begin to see. But now, another thing we need to look at is the government itself, and which the Minister for Labor increasing the salaries of the workers. And that could also be another problem. Like you bring up liquidity into the system. I think CBN might factor all these problems. They might be bringing out liquidity, like you pointed out, but yet those liquidity are finding their way back into the market through the electoral campaign, when Nigerian electoral campaign is driven by cash. So definitely, and what we might see, and what we've always seen when it comes to an election year, I hope this year is not an exception. We see that the exchange rate gradually comes down because there's so much awash with dollar to change to naira, because the politicians are not going to be giving the electorate dollar; they'll be giving them naira. And I think the only challenge that we have in that is that if I get my facts right, the Economic and Financial Crime Commission have already said that we will be watching you people. We will be watching you people. So that is where it could be a challenge for them, because definitely the kind of exchange rate we're having in the parallel market, there's no reason why the naira and the dollar should be exchanging at 700. There's no reason whatsoever. And that's why you've seen that before, when you have an undervalued exchange rate, you see the World Bank is overvalued. But in this case, you've seen that the World Bank, the IMF have been silent, because they know, as it stands now, that exchange rate is driven by speculations. It's driven by speculators thinking that the naira to the dollar must get to 1,000 before we see an equilibrium. And that is where the CBN need to be up on their begin to see how they can meet legitimate demand. If you look at it critically with what the CBN is telling us, because they have the data, those people, the Bureau de Change market, that tends to drive the price, that tends to be like the official exchange rate of the naira, does not even serve up to 10% of Nigerians, because most of them still goes to the bank, most of them still use the I&E windows, most of them still use the CBN direct intervention. And also, definitely what we need to do, and I keep saying, why we have seen the exchange rate goes to this level, is because that market, the Bureau de Change market, you removed it, and you have not created a seamless market like what we obtained when you use the Bureau de Change. Once you create that market, either through the bank or through an established institution, then you begin to see the rate come down, because people that will be able to, that usually go to the Bureau de Change, will now find their ways into those places. So for now, you've removed the Bureau de Change, but you have not created a window for those people that used to access the Bureau de Change, that those legitimate people. So, but you have, if you create that window that were removed through the Bureau de Change, then the Bureau de Change and those the new avenue you have created for those people that access the Bureau de Change to be who is able to meet our demand and at what rate. So economic terms comes to play. The higher the demand, once you can meet the demand, the rate will go down. So that, for me, that's a major problem. You've not created that market for those people that used to access the Bureau de Change.
Okay, Mr. Before we let you go, the governor raised some concerns in his post MPC remark, especially as it concerns another possible global recession. In the American economy, they have seen 2 quarters of negative growth, even though they are refusing to call it a recession. That is technically, that is a technical recession. We are seeing similar things in the UK and across Canada. And I mean, we are barely struggling to come out of the disruptions that is occasioned by the COVID pandemic. Growth is still very slow in China, as you are aware. What kind of a disaster awaits, especially a burgeoning economy where Nigeria features in, if the world plunges into another recession at this point?
Unfortunately, if the world plowing under another recession at this time, Nigeria will be greatly impacted. But in the positive, maybe they cut the price of gas. I mean, crude oil will come down, then refined petroleum product will come down. Maybe we'll not pay so much subsidy. Then the government may have money, but again, will not be selling more crude. But again, when you look at it, are we really selling more crude? Because most of our crude, the last time we did about 900,000 barrels, have been stolen. So recession could come and become a positive to us in the short term, especially in the area of bringing down the price of crude oil, then reducing our payment of refined petroleum product. But we may, if we do that, then we're able to boost our reserve, then we could have stability. I keep saying 2008, we're able to maintain that because of a robust reserve. But on the negative, and what we by importation of goods and services, that will have a very negative impact on our economy. Job losses we'll see because the multinationals will definitely be affected. It will not be good news. Like you said, technically, the world is in recession. The world is in recession. The UK are already saying that they are already in the recession, even if they've not said it. America is not really there yet because of, like I said, the technical intervention, direct intervention, and they are able to do this because they have the data to know who earns this, who earns that. For us, we don't have those data. So definitely it will be a very, very serious challenge. And that is why the CBN is looking for it and say, look, we need to control what we can control and see how we can deal with what we have no control over.
Finally, before we let you go, let us take a look at the Nigerian capital market. We are beginning to see some declines below the 50 million basis points, and we are beginning to see that because of the normalization of interest rates, investors are beginning to pull out of stocks from Nigeria and are heading back the other way. And we know usually ahead of an election, the second half of the year preceding an election, the market usually takes a dive. What's your take on how the market is behaving currently? Is this something that is familiar? Are we likely to see further dip, or we'll see some stability, given that even the central bank and the IMF projections for Nigeria's growth continue to remain above the three-point threshold?
Yeah, thank you. The stock market, the capital market itself is undervalued, underpriced at the moment. This is an opportunity for Nigerians to begin to think of how to invest in the capital market if you have the funds, because our stocks are greatly undervalued internationally or even within Africa. When you look at those companies, the brand and the kind of profit they have been making, so definitely is an opportunity if you are about to come into the stock market, because price of some of these equity are all-time low. Their PA ratio is very low, which tells you that their price at the moment is undervalued. So they are all bargain hunting. And the good news is that, like you said, we don't have those foreign investors that will go out of our market like they used to do before, because as it stands now, about 90% of the Nigerian market is being played by indigenous investors. And so that's why you've not seen those rapid fall. Ordinarily, with the crisis you are having in the UK, with the crisis you are having in America, you would have seen our market would have nosedive more than what we are seeing now. Now, what we are seeing now in the market is investors looking for exits and then looking for good entering point to make good value for their investment. So the stock market, what we see going forward, yes, the numbers that came in the half year were very good, even from some of those sectors, especially the banking sector, the financial sector was very good. So we expect the third and the last may not be very fantastic, but we see them to maintain, and those banks that will pay dividend will be able to still pay dividend. So going forward, I think the stock market will suffer a little, like you said, an election year. But once we have the peaceful, the first beneficiary of that transition is the capital market. So it's a good time for investors to look at those equities that are selling at all-time low, especially in the financial sectors, and then look at how you can take up on, and also in the conglomerate sector also. The only side you see investors might not be, our advice investors to be careful about is the retail sector. I mean, a lot of Nigerians are reducing what they buy because their earning capability is the same and most of this good has gone up. But for other sectors, I think they have opportunities to buy in at a low valuation, and in the long term, it will come out fine for them, and they will be happy they did that. Recession is not suicidal. I want to say recession is what I call an opportunity time for people to own their economy and for people to partake in the ownership of the economy, especially, like I said, of Nigeria that we are not enjoying. If you take advantage, you have a good savings plan during this robust time, it's time for you to begin to look at the capital market. It's a good investment to hedge against the rapid inflation that we are suffering in the country at the moment.
All right, thank you very much there, Mukhtar Mohammed, for those very deep insights into the Nigerian economy, the way forward, what we're doing, what we need to do, and how we need to do it. Thank you very much for coming on the show this morning.
It's a pleasure to be on your program. Thank you so much.
Thank you.
All right, and that's how we're going to wrap it up today on Daybreak this morning on Trust TV. Let's do it again tomorrow. I am Ibrahim Yusuf.
It's a pleasure to have had you join us this morning. I am Sunday Michael Ogu. Thank you for staying with us.